Good day, everybody. Brian here from quantlabsnet.com. Today is December 5th. I'm going to be showing you probably one of the most sophisticated end-to-end uh, workflows that I've got working process. I'm hoping that this will work. I've spent a good couple of days trying to figure this out, and I'm going to show you how it works, and we'll go from there. All right. So as it stands right now, we're looking at futures and options. We're going to include all the steps except the first step and the last step. First step is using MotoWave platform, trying to figure out what contracts for futures look good to trade on. And then the last step is the plugging in of the C++ code um, to work with Rhythmic. Okay. So I am going to show you what we're going to go from is an actual PDF with formulas in it, all quant based, all high frequency trading related. From there, we're going to look at two different dashboards in Python Streamlit. One that does a backtest, and then there's another one from all the strategy types that it comes up with. Two, I think, or three uh, strategies that are look the best for forecasting purposes. And the last phase is taking each of the top three and showing you the C++ coding of each strategy, or bot, as the youngins call them. So let me show you what we're dealing with here. All right. So first things first. Okay. So first things first. Here's the PDF I mentioned. So out of everything I've looked at, we've identified. This was 2 days ago that the micro ES, which is basically the S&P, looked best. Okay, so we can run through this and have the AI generate what it thinks are the various. Now I'm feeding it real world market data from the platform MotoWave. I first tried it with tick data. I can do tick data. I can do 100 millisecond data as well. But in this case, that works the best is daily data. So that's what kind of data we're working off of. But you can see here, this can go very low level, and the Rhythmic API in C++ can definitely do real high frequency trading. We're using both in this video, Python and C++. Everything you're looking at is 100% generated. Okay. So you can see here, we've got all the different order flow, MES futures, basis arbitrage, very sophisticated PDF of a variety of um, different formulas to work with. Okay. So this is what it came up with. And as I said before, a lot of the ones that I'm using, I'm just going to walk you through this. So if you want to know about it, that's fine, but I'm just going to whip through this. All the different things you can see here, MES option skew arbitrage, and it gives you the entry conditions, the exit conditions. And again, I can do this now with the data from Rhythmic. And with Rhythmic, it's very capable of doing this order flow stuff. It's very careful. It can definitely do C++. I won't say high frequency trading because you're not direct market to access, but of any retail, anything, including trading platforms, this is the closest you'll get to high frequency trading, folks. Okay. So this is using the true the quant formulas, the different strategies, and all that fun stuff. Okay. So from there, this is where the fun stuff begins. Okay. So here's the data that I was talking about. This is all daily data, and I could do tick data, I could do hourly data, and I'm just trying to decide what combination works best. But I'm going to show you all the different combinations and things we can produce. Everything's coded. The PDF was coded by AI. The code that you're about to see is AI, but this is real market data. Okay, so this is coming off the last 2 days. Um, this goes all the way back to 2023. You can see here, today is the 5th of December. So you can see here the last entry is when we generated this was on December 3rd. It goes back all the way back to September 24th, 2023. Okay, so this is over 550 rows in this um, CSV or to work with, and it works awesome. So now we're going to hop into, I prefer Linux. Okay, I'm just not a big fan of doing everything in Windows, but most likely the C++ you're about to see will have to run in Windows because it's going to have to connect into the Rhythmic Trader Pro software. Now, I have looked into the Diamond Cutter from Rhythmic, that particular API, which gives you the gateways into the Chicago data center, CME, or the Aurora as well. And it could be globally anywhere. But you do have to have uh, rent. You have to rent the servers from the CME um, through their service, and I think they can probably deploy it into at least Aurora. So that's another option through the Rhythmic ecosystem, we'll call it. Okay. Um, so let's take a look at some of these. Okay. So what you have here is this folder. I'm going to make this available to my Quant Elite folks. So if you're an Elite member, just go into the group here for the Quant Elite. You can find this PDF that has been generated. Okay, right here. This is the title of it: Microstructural Arbitrage Decoding Institutional HFT Methodologies for MES Futures and Options. Okay, that's where you go. Now, what we're going to look at here is everything past the PDF. First thing I want to show you is that we're able to generate a back test. Okay, so again, as I said, this is all done in the MES backtester. Let's see here. I got to make sure I've got the parameters down right. So we are going to do Streamlit. Actually, let me see here. It should have my TXT files. Doesn't look like I have my TXT files. Okay, so yeah. So let me run Streamlit. Hopefully this will work. Run MES backtester, and then we have to specify our file, which is this one right here. So that's what we're going to pass into it. Hopefully this will work. It's very fussy lately. Depends upon what the AI generates on the file name. It's a whole nightmare. It's part of the delay of what I had to go through to get the file loaded, the CSV. Sometimes it works, sometimes it doesn't. In this case, I'm passing it um, through the file. Okay, so let's see here. File not found. Of course, we've got mistake here. So, oh, okay. Hopefully this will work. Let's pray. These typos. All right. So let's see. It should load up our file here. Looks like it is loading up the file. Okay, so it's loaded up. 553 bars. Okay. Now, the nice thing about this is so all our data is preloaded. Okay. So this is the sophistication of the AI. 100% AI. I've got my prompting down now. It took about 2 days of work to get to this point to properly get it working. So here we have um, our equity curve on MES. Okay, going back to 2023. So now what I can do before I start, coming back from all of those strategies, we have future strategies, we have option strategies, which is synthetic. For those that don't know, I do have a course that talks about futures and options that's highly advanced, and you can do pure futures trading. You can also do options trading alone, or you can do options trading combined with the futures, and out of that you can create these synthetic strategies. So you can see here what we've got is a variety of different future trading strategies. These could be LDI, which is analyzing the order book and balance proxy using volume weighted buying selling pressure. And then we also have these different various strategies, futures only, and then these combined option strategies. So out of that, the LDI momentum was one of the top performers, along with the long straddle. Okay, so I'm going to run the back test, and let's see what it comes up with. So as part of my prompting, what I've done is I've asked the AI to showcase the top performing strategies for all of this data. Now, this is all futures and options data here. So is it running? Okay, I think it's still running. There's a lot of analyzing here, so you have to be patient. Now here you can, in the parameters, you can put in all the different commission rate, your initial capital, your assumed slippage, and all that fun stuff. Okay, so we're now running it a second time. So what happens when you try to be impatient. So again, this is a Streamlit app, and the nice thing about AI that I'm running is the most advanced Claude there is. Okay, that's what I'm using to generate the code because it covers the debugging as well. Okay, so we're going to show you here all those strategies of top performers. Okay, I'm going to show you a table, and part of it is the number one thing I think people need to really understand now that we have AI. We need to focus from the top down in terms of priorities, what will make you successful and even career. You have to focus as a portfolio manager. So here we go. So you can see here, we have our stats here of our top performing strategies, okay, in order. Okay. So in here, we've got our Iron Condor option, synthetic. Now, this plot is known to hallucinate. Okay, so we know that. So we're going to know that these annual returns. Is it possible we can get a 60% return? I can't say. But here we see our annual volatility. Anything under 15 is kind of considered pretty good. Okay. We have here a Sharpe ratio, our Sortino, and then the next one we have is our long straddle, which is these are options now. Okay. So we have here our annual return. Now, I can't, because I don't know if this is hallucinating or not, but generally these are pretty good. Okay. And then the volatility is still within a tolerance. Okay. So out of that, we have here some other interesting facts. So here, if we focus on future strategies, we have trend following. And you can see here, we only get, let's say this is correct, 17%, slightly higher volatility. Okay. A Sharpe ratio is not as good. Okay. Anything over two is considered, yeah, as I said, Goldman Sachs want to hire you. And the Sortino, which includes the volatility as well, because the Sortino will filter out the volatility. So here, if we ran all of these strategies together, this is what we get. Actually, no, that's not true. This is the combined equity curve of each strategy. So you can see here, our number one strategy is in green. So that's our long straddle. And then our next one is the Iron Condor. Okay. So without a doubt, options is going to give you a much higher return um, versus just trading futures on your own. Okay. So if you're coming in from a futures prop shop, it's fine. You realize if you're not adding in options, you're not going to get the boost. Okay. So out of this, I can take a look at some of these particular strategies. So let's say if I want to look at one of the uh, option strategies. So let's say the Iron Condor. Okay. So here it will automatically load in all the portfolio metrics. Again, this is real data. Backtest it. Backtest it. Okay. So here you can see what's happening. Okay. So here's our standard metrics for a portfolio standpoint. total return bogus, annual return bogus. That might be possible. I don't know. But the thing here is what we want to pay attention to are annualized volatility using this particular strategy. That's pretty good. Yeah, that's really good, in fact. Max drawdown, that's pretty good too, because any the lower the drawdown, obviously, the better. Okay, so here, if it's all true, I can't say if it is. That Sharpe ratio is me out of whack. Okay, and then we have a profit factor of 7.5. Now, if you coming in from a trading view, anything over a profit factor of 2 is very strong. Okay, so here we are dealing with a win ratio of 94%, skewness and kurtosis. Yeah, I'm no expert in options trading. And here's all the different metrics on the different probability of uh, yeah, your expected final equity, all your equity at starting at 100,000 over that time period. So again, it's based on 1,000 Monte Carlo simulations over 252 periods. So this is running this particular strategy daily on daily time frame. Okay, and that's what I've been saying for a while. It's better maybe to slow down your trading because you get a higher return. Same strategy, but that's where you get all these different combinations. Okay, so that's all the different single performance metrics for this particular formula. But you can see here, we can see our lowest drawdown, highest win ratio, blah, 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 blah. This is excellent. So we get a correlation between all the strategies, so on and so forth. Okay. So I can go back in and load in the performance of the other um, strategy as well. So here is based upon our performance historically. And here's the difference between with this particular strategy. Okay. So again, that's an option synthetic with uh let's see here. Okay. There's a lot going on here. Okay. So there's that one. Okay. That we just looked at. All right. So I'm gonna load up the next one as an example. So again, you can see the difference between um options and the other one of so I think the Iron Condor and the Long Straddle was the other one. These are the top two performing. Okay, so it's going to load in the Long Straddle now. I think this is the better one. You can see the steepness of the curve here. Okay, same data, same everything. This is real world market data. So this has got a win ratio of 88%, Sharpe ratio at almost 12. Max drawdown at negative 0.1%. That's incredible. Okay. So you can see here again, we've got our standard metrics. Now, again, I don't know if this is true or not, but based upon what I'm showing you, I go, let's go with that. Okay. Even if it's not true or not. Okay. It's, a, it's an option strategy. So let's go with that. Okay. So that's step one. Okay. So now I'm going to show you the second, actually, let me show you the second application here for Python. Now, this is the forecaster. So what we've gone through is step by step. So now we're going to say, okay, we've back tested all these strategies. Let's see how the forecasting is. Okay. So in this case, what we're going to do is run this. Okay. It's going to forecast uh, both those strategies, option strategies, synthetic, and there's different combinations. And again, all of the stuff, parameters, the model types, all of that is generated because of the Claude. Okay, so now we've loaded in the data, preloaded. Okay, so this is where it gets interesting. So now we're assuming 5,000 capital. Okay, we've got a multiplier here of 5. Okay, um, and then it's very interesting. Okay, so I'm going to run this complete analysis. It's going to take the same amount of time as a forecasting. So you can see there's 32 different combinations. So we have, let's see here. We've got here different combinations. This is the key right here. Is we have futures long, we have a long straddle, we have another long straddle. But what kind of forecasting are we basing it on? So we have a futures long, which is built around the GBM, geometric Brownian motion. We have a long straddle, GARCH, okay? And then we have another long straddle of GBM and a futures long of jump diffusion. Okay, so these are the forecasting. I'm not sure what this composite score really means, but the total return is right here. And again, it's the same data, and we're using that data going back 2+ years and then forecasting into the future. So this is probably more accurate. Where if I'm going to continue to run these particular strategies, these are the projected annual returns I can expect. So with the GARCH, I could maybe expect 13.77 or 10.3 on that. And it's also going to forecast the volatility. So again, it's no different than doing the back testing. The back testing that most coders will use or quants or whatever will use. But the thing here is we're letting the AI do all that heavy lifting for us because we're providing the data file, the CSV of the data of the MES for the last 2 years, daily data. Now out of here, you can also measure out the volatility, and I'm sure we could probably let me just see if I can wrong way. Okay. Okay. Let's just do this. Okay. So you can specifically see all the metrics. Okay. And again, all the source code will be available for all my quant elite. This is why my price has gone up to what it's at. So here you can see all the different futures, average composite, average return, average Sharpe ratio. Okay. So here, these are the three ones that we're gonna go with. Straddles based upon GPM, jump diffusion, and GARCH. Okay. So I'm going to show you that next. So here, let me just see if I can do this. There we go. Okay, cool. All right. So yeah. So you can see here the average win ratio is fairly low. Okay. Um, in this case, we have the volatility, the Sharpe ratio being negative. These are your top ones right here. Okay. Sharpe ratio. So we're looking at GARCH, GBM, and jump diffusion. Okay. So I'm going to show you that in the C++. So here we can do analysis on a correlation, the forecasting model, and then we can look at the different, in detail, the metrics. So here's our total return, annualized return. That's assuming everything doesn't change with the historical data when we forecast out. And then we also have the Sharpe ratio, volatility, win ratio is very low, and so on and so forth. Okay. So some of it may be wrong, some may be correct, but that's what we have. And to be truthful, I like this. Okay. Um, so here's our composite score. Here's this by Wig uh, set of metrics: the return, risk adjusted, risk metrics. I didn't ask for that. The AI gave that to me. Okay. Again, we can always rerun this, and this is for forecasting. So it's very, very, very powerful. Okay. So let me just close that. All right. So that's the forecasting. So knowing that, what we can do now is we have three separate simulators I'm going to run. Now, This is the next step. This is typically your C++, again, created by AI. I have a set of prompting that work for this to generate this. And there's three separate simulators I want to show you. Um, so I've got a README file here as well, so I can show you the first one here. Um, so let me just show you the first README file. Again, there's all this code will be posted for my elite folk. And it's pretty good. So I'm not going to obviously show you the C++ code. I'm not stupid. But if you want it, you can get access to it via joining the Quant Elite program. So again, here's the C++, okay, based on MES futures data. Okay, so we provided that, as I said. We're using the geometric Brownian motion. Okay, so we have here simulate MES futures price movement with configurable drift and volatility parameters. Okay, you can pass them into this code. You can change it in the code if you want, whatever. So this is multiple strategy types. So we have here all of these: cover call, collar, straddle, strangle, bull bear, spread, Black Scholes option pricing for the calculation. And I'll generate some signals with SMA crossover and RSI. And this is all simulated. Okay. This is very important to understand is that the next step I can't show you because that's the rhythmic API stuff. I can't show you that because of the terms of service. Can't provide the source code. But from what I'm seeing, I may have a methodology that will work. My next trading day, I'll try one of these out and see if it rates. If so, awesome. Okay, so there we go. So there's all the different strategy types. It's going to give you all the portfolio metrics that I asked for. Trading log as well. Sharp ratio, Sortino, max drawdown, win ratio, value at risk is what a lot of institutions will use, and so on and so forth. So here's how to run it. And again, this is on, let's assuming C++, sorry, Linux. You can't put it over to C-Line on Windows because it has to run on Windows. As I said before, it has to run against a live session running with Rhythmic Trader Pro. Okay. Okay, so it has some color and all that fun stuff. So let's run this. So everything's all ready, compiled, ready to go. Let's run the first one. So here we go. So here it's going to run. Now this is sampling random data and a live random stream updating every 2 ticks. Okay. So here's our starting position. We have 3 ticks coming in, volatility, blah, 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 portfolio metrics, which is important. And we just wait for it to start trading and so forth. The point of what I'm trying to show here is very important to understand that some people say, well, how do you know that's valid? How do you know this is correct or not? That's not the point of this process. The point is that we're able to take AI and take all these different trading ideas, let the AI generate all that, generate this quant style research paper report with all the formulas I've shown you, and then feed that back into AI for the code. And then generate your Python to do the back test, run it against all these different types of strategies, see which ones are the best, and then you can forecast as well. So that's what we're doing here. So this is now taking it to the live trading. Okay, so you can see here, it's supposed to be in line, but I can dresses up however I want. But you can see it's already trading here. Buy, sell, buy, sell. It's different using this SMA crossover, RSI oversold. So it's using classic technical analysis stuff as well. So that's it. That's what I want to show you that, hey, it's running. Okay, so that's the first one. Okay. So there's all the source code for the 3 different simulators. So let me show you now the second one. Okay, this is the second simulator. Okay, and this one, I think that one was using I can actually see it. So okay, so this is the first simulator. So I believe which one? So this is using the geometric Brownian motion. Okay, cool. Let's go back. Okay, let's look at the second one. What does this one entail? This is going to be, I believe, GARCH. Okay. Now with the GARCH here, um, yeah. So here's the GARCH. Okay, so we have here now with volatility. Okay, and now remember we're choosing that based upon that backtester. This is one of the top one of the top two um, forming strategies. Okay, so here we're using a GARCH volatility model. Here's the parameters that we can supply it. Here's the formula based upon here where we're using omega, alpha, beta, long run variance, these different coefficients as well. And then we also have a persistence as well. And then for the AI generation, it enables it to give us, because I asked specifically for this, to give us the entries and exit conditions as well. So here we're using this large base price generation. It involves time varying volatility that clusters. High vol follows high vol. So um, again, as if I'm an expert here, but part of the other benefit here is if you trying to be a quant and don't know what to do, you can use the AI to guide you, and also use the AI or the code that's generated to reverse engineer all this and to understand it at the same time. Until last year, this was not possible, but because we have AI now on the scene, it enables us to be able to go through this process to figure out all the mathematical equations that go with this for this type of strategy. You saw the results, or what was at least projected, and the results of the back test for this particular type of strategy. Okay, so it's predicting future volatility basically based upon strategic decisions. The other thing that's important here is adaptive. When you get into high frequency trading, and especially when it comes to machine learning, you want strategies that self adapt. And this is a pretty good one. That's probably why you have very low volatility and a high win ratio. Okay, so here's the 10 different option strategies. It's coded in, again, generated by AI. We already talked about the particular LM that does this. We're throwing out protective puts, cover call, collar, straddle, strangle, bull call spread, so on and so forth. But we're also including iron condor, butterfly spread, calendar spread, comprehensive portfolio metrics, which I particularly asked for. All of these, which is pretty well the same as before. Okay, here's the compilation and how to run it. Here are the parameters. Okay, so you can go through the code to figure out what those parameters are. I'm not gonna run it without parameters. Okay, so let's run this. And if you need to know the parameters, just the comments are pretty intelligent um, to go through to see how it works. So here, I won't be surprised. That's the order that I just gave it. This is the order of probably of the parameters when you run this. So here you can see we have our omega, arch, garch, and the persistence. Um, current vol that doesn't make sense. And we're forecasting what the volatility will be. And again, here's our positioning in the market data. Okay. And our positions, we have portfolio metrics as well. So we have a Kelly criterion as well, profit factor, all that fun stuff. I'm just going to cycle through. Okay. As I said, it's supposed to be in line. But let's see what's going here at the bottom here. So it's doing the same thing as before, where it's basically uh, using every 2 ticks as well. Because the thing is, the beauty of this is the next step, as I said, is we just say, okay, here's all the stubby code with the data, this data stream, market stream, and the orders. We can substitute um, that coding with the Rhythmic API calls, so that will become your production with uh, the Rhythmic API. I'm not saying it's going to work or not. I don't know, but you can definitely be on a much quicker path to get it working. just so you know. There's no guarantee here, but you can see here it's kind of working. As I said, we can always tweak this to whatever we want. This is just standard code. And you can see here, we're doing a buy and a sell, blah, 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 and off it goes. And we can have this running in the background against a live Rhythmic Trader Pro session. And as I said, this is only for micro ES. And part of it, we can dedicate it to particular option chain data and associate with a particular MES forward contract as well. So, pretty cool. Okay. Um, so here's all our trading right there. Whatever it's, and this is all random. Okay. So let me break that. Okay. So that's the second simulation with GARCH. The last simulations with the jump diffusion. All right. So let's take a look at that set of read me text. Okay. So here, um, well, hey, so again, this is pretty cool. It's it's here's the source code. To give you an idea of the headers, these are all standard STL. There's no external frameworks here. Okay, so these are all just standard template library. You don't have to download anything external. The average size of these C++ source files are about 1,500. It's not very it's not complicated. There's not a lot of things going on here in terms of multiple files and header files. We don't have any of that, so that's a good thing. All right, so just to give you an idea, let's see here. Yeah, looks like I messed up there. Here's our coloring settings and all that. Again, that's 100% generated by the AI. So let me just run this one last as the last simulator. Um, here we go. So here you can see we're doing a Merton jump diffusion model. Um, we're initializing everything. So here we have our intensity, the mean, the volume, or sorry, the volatility, the premium, volatility, total volatility, and the probability per tick. Okay, so this is now getting into, quite honestly, high frequency trading stuff. And again, this is all generated by AI. And because it's so sophisticated, um, it's pretty good. So again, it's just we're using randomly generated stream data for this option chain, whatever it's using. But you can see here the standard that we're getting here. Um, no positions yet. Entry volatility and all these other metrics, and along with our portfolio metrics as well. Any drawdown, unrealized, realized profit, profit and loss, sharps, routine, all that, the variance, the conditional variance. And again, that's what a lot of institutions will use. Our trading win loss with our win loss ratio, with our expected, and so on and so forth. So this is pretty powerful. And again, you could put this into whatever you like. But you can see here it's doing some trading here. So it's doing a buy, reason, quiet trend, trend exit, and RSI overbought, hover short. It's pretty sophisticated. Now, depending upon your size of the uh, of your portfolio, and again, you can customize all that in within the code as well. This is fantastic in my mind. Um, and being able to display this as is, the source is there. And again, this is why we have what we have. All right, so that's what I got to show you. Okay, I have to say that that is pretty cool. Okay, that 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 is pretty cool. Okay, I cannot sit there and deny that. Okay, um, because uh, to get AI to do all that, if it's valid or not, it's another question. But the only way you can do your analysis by paralysis or paralysis by analysis as much as you want. The only way if you know this is working or not is to actually put live money on it. So we've got an account already funded. Looking at this particular strategy, I probably will have to either put more money in or in the configurations, either both on the portfolio forecasting. Say I only have X amount of dollars. It's a puny amount. That's why I'm only trading on the minis, or sorry, the micros, and so on and so forth. So that to me is very powerful. Okay. Let me just show you some other things I want to show you as well. Okay. So hopefully you could see this. So as I said, if you want to know more, there's a couple of places you can go. As I said, this is the current pricing for this elite. We were very cheap. We were 1/10 of that up during the Black Friday. Okay. So now you can see how sophisticated we're getting by showing you backtesting, the forecasting, or the equivalent of the walk forward analysis. And on top of that, being able to generate C++ code that is ready for high frequency trading. That is pretty powerful. You would have gotten access to all of our groups or private forums here. So this is going through the whole motion, full transparency as well, and plus the coding as well. So if you want to really get know the whole process, there's a couple of things you could do. You could either just come to quantlabsnet.com. You can either choose learn. And I've got a free ebook on how C++ infrastructure is built with a lot of the HFT shops. And then on top of that, if you want just to see the style of what I'm doing, you can get yourself a 7-day free trial and you get access to some daily news, some quite a lot of news, in fact, and then just different types of analysis that you would get as part of for only $47. And on top of that, some other stuff as well. And it's pretty powerful. But to get the programming stuff, that's the elite programming. Okay. So I've already shown you that. That's pretty well it as well. And let's see here. Just chatting. Hopefully you've seen that. Mhm. But that's pretty well it. Um, so it's pretty powerful. So we'll leave it at that. And thanks for watching. Hopefully you're excited just as I am. And we'll talk later. Bye bye.